Hello, I'm Brandy Williams Avatar, an IRS enrolled agent with over 20 years of experience in individual small business and corporate taxation, accounting, and auditing. I'm here to simplify one of the most powerful tax breaks for small business owners, the Section 199A deduction, better known as the QBI deduction. If you're a sole proprietor, a partner in a partnership, or an S-Corp shareholder, listen up. The IRS allows eligible taxpayers to deduct up to 20% of their qualified business income directly from their taxable income. The best part? You can claim this whether you take the standard deduction or itemize. It's essentially a thank you in the tax code for pass-through entities. However, if you're a C-Corp or just a W-2 employee, this one isn't for you. To understand your total deduction, think of it in two components. First, the QBI component. This is the core of the benefit, 20% of your business income. But it's not always a straight 20%. Depending on your total income, the IRS looks at how much you pay in W-2 wages and the value of your business property. Second, there's the REIT and PTP component. You can also deduct 20% of your qualified dividends from real estate investment trusts and income from publicly traded partnerships. Unlike the main QBI component, these aren't limited by your business's wages or property. Now, let's talk about the guardrails. The deduction is limited to the lesser of two amounts. Your combined QBI and REIT income, or 20% of your total taxable income minus any net capital gains. Basically, the IRS won't let you use this deduction to wipe out your capital gains tax. Also, a quick heads up. If your business provides specified services like law, health, or accounting, and your income is above certain thresholds, your deduction might start to phase out. Ask us about those phase-out thresholds and if you qualify. What about rentals? While rental income isn't always QBI, there is a safe harbor. If you spend at least 250 hours a year on your rental enterprise and keep diligent records, your rental income can qualify. Crucial update: the QBI deduction was originally temporary, but recent legislation, the One Big Beautiful Bill Act of 2025, has now made this deduction permanent. It also introduces a new $400 minimum deduction starting in 2026 for those with at least $1,000 in business income. Tax law is complex, and QBI is no exception. This deduction is a massive opportunity, but the math matters. Would you like me to create a tax plan to minimize your tax liability and maximize deductions? Contact Williams Accounting and Tax Services today.